A very good evening. Warm welcome to everyone for today's session on small enterprise, SME banking and insurance. We have been conducting these webinars quite often and also offline, and it's very happy to see that a lot of people join us every time we organize an event, either offline or webinar. So, as a part of our ongoing support to the Indian MSME community, we've been organizing various events on conferences and webinar for the benefit of SMEs in India. So as part of Small Enterprise India's initiative of educating SMEs, most of you who have been attending our events in the past and who are attending this webinar today, they have seen the kind of efforts that we have been putting in and the kind of willingness and the excitement for the SMEs to come and attend these sessions to enrich their knowledge. So once again, a big thank you to everyone who joined us today. And we have an excellent panel of speakers today, which I will definitely introduce everyone to you. And with this, I would like to start the session today and hope that you all are coming with a lot of expectation in terms of, earning that kind of knowledge from the speakers today. So thank you for joining for today's webinar. So the theme of the banking, the SME banking and insurance, which is an integral part of every SME who are looking at SME finance and managing or raising capital for their businesses, or how to manage their risk and how to mitigate that. It's always a major question mark for an SME. So most of the time, an SME will not be able to clear his query or his doubts, or he will not be able to understand who is the right mentor for him, or how to approach those mentors, and who are the right people and where to approach, and what kind of support they can give you. You have 110 queries on that. Today we have 3 experts who will be talking on raising funds to managing that, and also we have an international speaker today, Mr. Vadim, who's all the way from Russia, who is entering India into a major project to help the SMEs into agriculture and various other sectors. So thank you all once again. We have Mr. Gagandeep, who is the senior manager from the NSE, National Stock Exchange of India, who will be the first speaker, and Jyoti Shirali, who is the founder director of Chrysalis Consulting, an expert into business consulting. We have Mr. Vadim, who is an international business development manager, Control to Go. He is based in Russia, and he will be sharing the kind of projects that how Control to Go can help the SMEs, especially in the agriculture segment in India. So we have been quite blessed to get this great speakers today, and we thank you, all of you, for joining us today. And while I have introduced all the speakers quickly, we will get into the program, the schedule that we are going to have today. The first slot will be by Mr. Gagandeep Singh, who is a senior manager, who is into primary market relationships at the NSE, National Stock Exchange of India. He'll be talking about the SME finance challenges and fundraising opportunity for growing SMEs on NSE Emerge. I hope it's going to be a lot of learning from NSEs for the SMEs who are joined today. Thank you, and over to you.
Thank you so much, Dojo, and welcome everyone. First of all, I would like to thank Dojo and entire team for having us over here in front of all of you to connect with all of you sitting here in Mumbai, directly across the nation, and of course to the different part of the world as well. So the topic of the discussion for today from our side is NSE Emerge. So the basic question is what is NSE and what is NSE Emerge? We all are not wary of the fact that a National Stock Exchange is one of the leading stock exchanges in the world altogether, and we have been here since inception for almost last 30 years. We brought about technological transformation in this country, wherein we helped reach out to the last mile people in connecting everybody to the stock markets. And, we have seen the tremendous growth that the Indian economy has seen over the past 2 decades. We all know that, everybody aspires to list their company on the stock market one fine day, right? That is, one of the most epitome goal in their entrepreneurial journey, right? Because they start from their own funds, SMEs generally. They go to the banks for funding, and post that, if they need more funds, they go to a private equity investor or a venture capitalist investor, depending upon their need as per their businesses are concerned. Post that, then they would want to liquidate their stock, or maybe give an exit to their existing investors on the stock market, right? So this is by far a small journey of how the SMEs go, and once they are listed, of course, then sky's the limit again, because you have participants from all across the globe who are participating in the growth story of the company. So then what is NSE Emerge? This is all about the NSE platform, where the companies get listed and trade their equity on the capital market. NSE Emerge basically is a platform which got conceptualized in 2012, when we as an exchange got the mandate to start with a platform for the growing MSMEs of a country. And as a growing MSME, everybody takes a pause that when we already have a platform for the listed companies across, which is called the main board of the exchange, then why do we need another platform called as NSE Emerge for the MSMEs? But I'm sure you'll echo my voice when we say that the rules and regulations, the eligibility criteria of the main board platform are too stringent, right? And even if you notice in the last 1 to 2 decades, a lot of companies who wanted to get listed on the stock market, they are of a sizable amount, right? They want to reach a particular destination in their journey, and then they want to list on the stock market. But for the MSMEs, there was a thought process. Way back in 2008, a task force committee was set up to basically understand what can be done for the MSMEs of a country. Now, I'm sure again you all will agree that over the last 2 decades, private equity investing fraternity has really increased in our country, and they really helped shape up a lot of things for the economy for the good, right? But somewhere MSMEs were still not able to find a platform wherein public would have participated in their growth journey. So a study was done, and it took about almost 4 years for them to conceptualize the entire idea. In 2012, NSE, which is National Stock Exchange of India Limited, and also BSE, the Bombay Stock Exchange, got a mandate from the regulator SEBI that we have to start a separate platform for the MSMEs to list on the stock market. Right? So of course, it is a promising fundraising avenue for the SME so far. I will get into the nitty-gritties of it, but before that, I will just want to give you a quick snapshot of where we are standing today. As on date, we have listed around 396 companies on the NSE Merge platform. They have collectively raised around 7,800 crores from the market so far. The market capitalization of all these companies put together is around 95,000 crores. So imagine if these companies wouldn't have gotten the opportunity to list on the SME platform. I have my doubts whether 10% of this entire pool would have been even eligible to list on the mainboard platform directly. But because they got this opportunity, they listed out here, and they helped the India's vision of a $7 trillion economy by a couple of years down the line. So this of course makes a huge differentiation out there. Another interesting point I want to bring to your notice is that the average fundraising size over here is somewhere around close to 20 crores. So that means when the companies on the main board go for an IPO, you wouldn't have really seen anything, below 50 crore of a fund sized on the main board. Now, though, of course, we have companies, raising 500 crores, 700 crore, 1,000 crore, 10,000 crores on the platform, right? But imagine the bigger companies raising that kind of a amount of capital for their companies. But for the SMEs, it was a difficult task, right? Sometimes a lot of SMEs may not even have a turnover as high as 100 crore, forget raising that kind of an equity for themselves. So SME platform really did wonders for them. The average issue size is around 20 odd crores, but if I tell you the rough framework, we have seen as low as 4 crores being raised on this particular platform for an SME company. The highest so far is around 100 plus crores. So the average somewhere comes around to 20 odd crores. You will see on the right hand side of the screen that I've mentioned something called as companies migrated to mainboard. So when I mentioned that we have a main board platform and also an SME platform, of course there has to be a bridge so that the SMEs companies can also go to the main board and sit right next to all the major giants of our country today. So out of these 396 companies, 137 companies have actually migrated from the NSE Emerge platform to the main board platform of the NSE exchange. So that again brings a lot of joy to us that we really help these kind of companies to grow in their own sphere and right now again sit next to the main board companies. This is the growth structure. If you can see a little bit on the screen, that I'll also increase my size. Yeah. So if you see, we started the journey in 2020, in 2012, and if you see, with the very humble beginnings, we had only 2 listings that happened in that particular financial year, and those 2 companies together raised around 44 crores. The next following year, again, we had only 3 companies and 42 crores were raised, and eventually, the number went on. So if you see the first 3-4 years, we hardly had any numbers on the platform. The idea was, not to push this particular platform as a different product for the companies, but of course give them an avenue to think that this can also help them, right? So if you see, there was a good jump in 2016-17, and 17-18 made a material impact to the entire platform. We had around 87 companies that got listed in just one financial year, and collectively they raised around 1400 crores on this segment. Then of course we had GST come into picture. We also had demonetization, which played a huge role in shaping up the balance sheets of the companies. And of course then COVID did hit. So all these events made a material impact for a lot of companies. But post COVID, when we transformed again, we pulled back ourselves from those shackles in those couple of years. It has been a good, tremendous jump in the SME sector, wherein the acceptability of companies moving ahead and listing themselves on the stock market really did change. So if you see in 21-22, we had around 31 companies, 22-23, we had around 62 companies, and this year, as on November 20th, we had listed 87 companies, and they have collectively raised around 2700 crores on the platform. And the year is not even over yet. And I guess I'll be very happy to say that we still have a very strong pipeline to end this financial year on a very higher note as well. So if you see, the jump and the acceptability is only because of the kind of changes that have happened in a lot of areas, starting with, let's say, the changes that happened in the Companies Act 2013, shaped up a huge role. Demonetization played a huge role in shaping of the balance sheets also, because a lot of business earlier, as we all know, that might have used to happen in cash, and those entries never got booked in the balance sheets of the company. But after demonetization and after GST coming into picture, a lot of those transactions came onto the books as well, wherein we had the balance sheet is improvised, the debt to equity also enhanced out there, their PAT also increased drastically out there. So if you notice, the balance sheets of the companies of the SME sector, particularly of the listed or all the unlisted companies also, in the last 3-4 years, their numbers have really increased, and the balance sheets have really come out very strong. So all these factors really put in a lot of effort to help the companies list on the stock market as well. Now, we have spoken about the facts and figures so far. Now to see, we've already discussed about what the NSE Emerge platform is all about, but I'll just give you a glimpse about that. Do not get confused about, when I say that what is a main board platform and what is an SME platform. These the trading that happens on these particular platforms are on the same platform for the main board and the SME company. We have not changed the basics of the trading out there. The existing platform, the existing trading terminals, the existing merchant banker fraternity, everything remains the same. We have not changed anything for them. It's a regulated platform by SEBI itself. The only benefit is that for the MSMEs, when they file the offer document, which is called as the draft red herring prospectus of the company, it does not go to SEBI for approval. SEBI has vested that power with the exchanges, and the exchanges can go ahead and list themselves on the stock market over here with just getting an approval from the stock exchange. So that's a huge relief, because when you file the offer document with the SEBI, it may take about 3 to 4 months, 4 to 5 months for an approval as well out there, right? But over here, it is, we I'm happy to say that, as far as the average of the days are concerned, I guess we have given approval in around 30 to 45 days as well. So that means if you file the offer document today, in the next 1.5 months, you can expect an approval from the stock exchanges, and you can go ahead and, open up your IPO. And in our experience, whichever company files for an offer document with the stock exchange, and the moment they get an approval, they tend to open their IPO as soon as possible. So that means if you look at the time span of the number of days a company takes to file their offer document and list on the stock market, is nothing beyond 60 to 90 days. So that's a very fast way of working on this particular platform. Now the basic question will always remain is that yes, listing is good. Listing really shapes up the way we think and see a lot of changes around us. But the point is that, are we even ready to list our company? The point is that should we list a company on the stock market, right? So that's the basic question a promoter should ask themselves. Of course, as not just because I am wearing the NSE hat, I should say that listing is important, but even from a normal entrepreneurial zeal that I have within myself, I can of course say that listing provides a lot of different opportunities for the promoters. Not to mention the kind of visibility and the kind of credibility a listed company gets. I'm sure you would have experienced in your own past as well. When you go to banks, you go to any other private institutions to look out for debt funding or look out for any kind of other funding, the kind of due diligence that you will have to go through, and the kind of due diligence a mainboard company will have to go through, makes a huge differentiation out there. So you go to a bank, you will always notice that SMEs end up paying a higher rate of interest, but a mainboard company or a listed company which is on the stock market, of course, is right, they tend to have a lower rate of interest. Why so? Because the kind of due diligence that those companies would have done is on the higher end. An unlisted entity does not get that kind of a benefit. Even banks have their internal rating structures. So once you're a listed entity out there, you will see the differentiation also. You would have heard about a lot of other deals like mergers and acquisition, where only where no cash deal have happened in the past. Promoters who are listed, they just part away with their own equity and give it to the seller, instead of spending any money on buying another a small entity, or or just doing M&A with them. So no cash deals help really it is really helpful for the companies who are listed on the stock market, because their stock can get traded as well, and that makes a huge impact. Of course, SMEs also face one huge problem in the country, is of retaining talent. And I'm sure all of you will agree as promoters that it is not easy to retain that kind of a talent. If the competitor can give offer a higher salary, they can easily go away as well. Long gone are those days when we used to call remember those old days wherein we had somebody called as a Muninji in the organization, who would stick with the company for generations together and might as well get their future generation to be part of the company. Now if the competitor offers a better package, the company can the employee can move ahead. But ESOPs is an alternate option out here, wherein a listed company can give ESOPs to their employees and retain the talent within the company. So of course there are multiple other advantages over here also. But and the biggest advantage of listing on the SME platform, you also have an opportunity to list on the main board as well via this platform without fulfilling the exact criteria of the main board companies. Out of these 396 companies, I may not be wrong in saying that maybe more than 300 companies, if even today they would want to go and list on the main board directly, would not be eligible to list on the main board. So that's the kind of advantage this particular platform has given. Now talk about what is the platform, why list, and point is who can list. So SEBI has mentioned a very simple criteria. SEBI states a company whose post-issue paid-up capital is less than 25 crore rupees can list on the NSE merge platform. That's the only criteria. That's it. So you'll be shocked to know that that's how simple it is. There is just a bit of bifurcation out here on my slide, which mentions that a company who wants to list on the stock market, if their paid up capital at face value is less than 10 crore rupees, they have to list on the SME platform. If their paid up is between 10 crore to 25 crore rupees, they have to list either on the SME platform or on the main board. That is the choice of the promoter. And also if they are eligible to list on the main board. A company whose post-issue paid up capital is beyond 25 crore rupees at face value, they cannot list on the SME platform. They will have to go to the main board to list on the stock market. So the definition of an MSME as per as the MSME Act, which the bankers use, does not play any role out here. We do not bifurcate any company based on the kind of investments you have done in your plant and machinery or in your services out there. That definition has no role to play. This is one simple point by SEBI. Less than 25 crore rupees of paid up capital, you can list your company on the stock market out here. Now, if you notice that almost the entire non-listed universe, almost 98 to 99% of the unlisted universe over here will fall under this category. Now, as a stock exchange, we also have to filter. So for the filtration process, we have kept some stringent eligibility criteria also, that we look after companies who are operational for last 3 financial years. Any 2 out of the last 3 financial years should be profitable for the company. When I say profitable, we look at the EBITDA. Mind you, before COVID pandemic hit all of us, the criteria was the last 2 consecutive years had to be profitable. But after COVID, we changed those rules, and we have kept any 2 out of the last 3 years have to be profitable at the EBITDA level. And of course, once you're filing the offer document with the exchange, the draft red herring prospectus I was talking about a while ago, that document should have positive net worth once you're filing in your balance sheet. It is okay if your net worth was negative in the past years due to exigency, due to XYZ reason. But once you're filing the offer document, this has to be positive. How do I start listing? It's a very simple process. You have to first make up your own mind whether you are ready for listing or not, because listing brings with it a lot of responsibilities on your shoulders. Compliances are a part of it, but I wouldn't hesitate to say this, that you're already doing most of the compliances as an unlisted company that a listed company will require. It is just one notch above it, that you have to start reporting them. As a private limited company, you're still doing all the reportings with the banks. You're giving your stock statement to the banks. If you have a loan with them, right? You're already filing your balance sheets with the MCA. And if you say that I don't want to part away with my financial knowledge with anybody else, my competitor might know what I'm doing in the business. So those things are a myth, because your balance sheets are available on the MCA website or any third party website for 200 to 300 rupees, right? So that's not the point out here. You have to crystallize your plan, what your project is, whether you should be going for listing today, or should you have a good decentralized operations for yourself. Because as a single promoter, a lot of SMEs are a one-man army kind of a project, because a lot of SMEs function in that manner. But we of course would require more decentralized operation, where you might have a factory manager, finance manager, marketing manager. But I'm sure even these pointers are of the past, because in the last 1 decade, Indian economy has transformed really well, and a lot of SMEs have decentralized their operations and built up good strong teams for them. So if you have done all that, you are again one step closer to the listing on the platform. The process is very simple. You have to engage a merchant banker for yourself, who will help you file the entire offer document with the stock exchanges. That process of filing the offer document with the merchant banker might take a long time, because you will have to deliver a lot of documentation to them. It's a 300 to 400 odd kind of book that gets made, which has your entire history in it. The promoter's track record, the company's financial due diligence, legal due diligence, your balance sheets, which are reinstated for the last 3 years. All those things about your industry, everything becomes a part of your draft writing prospectus. And once you make that, you submit it to the exchange. But before moving ahead, I'll just like to share a few pointers about the compliance also, because everybody will want to know what are the challenges out here as well. So if when any company comes out for an IPO on the mainboard platform, they need to have at least 1,000 allottees. Otherwise, the IPO does not get subscribed. Will not be allowed to go through. So over here, we understood that SMEs may or may not really have that kind of visibility in the market, and they may not fetch 1,000 applicants. Right? This is when they were trying to formulate a platform for the SMEs. So the regulations state that you need to have only 50 allottees. That means 50 people can come together and bring an IPO of a company. That's how simple it is, right? Dilution. When you come out with an IPO, your minimum dilution is 25%. That means the promoter will have to let go of 25% of the equity to the public at large, right? Because then these people will become 1/4 owners of the company as well. Again, there is a myth around it that if you part away with your equity, you might even end up losing your control. But as I had mentioned, that it is only 25% dilution, you still hold 75% of the stock with you. Until and unless somebody holds the majority stocks in your company, nobody else can take ownership from you. And our Indian laws are very stringent around here, that nobody can just come and buy all the stock from you from the market against you and become the owners out here, right? So the takeover laws are really stringent. And again, you still have 70-75% equity with you. So that means until unless you choose to sell it or give it to somebody, nobody can come here and ask the rights about your company. And all the equity that gets diluted out here, or the one that you're holding, has to be in a dematerialized form. This equity is issued at par. So if you already have some preferential allotment in your balance sheet today, those will have to be converted into at par equity so that the IPO can sail through. DRHP is in the same format as the main board and the SME. Again, there is no relaxation out there. The due diligence platform thing remains the same for a main board company or an SME company. There used to be something called as an IPO grading, which companies used to do. That means a third-party grading from Crystal's, Mera, ICRA, other companies. But that is not a mandate on the SME platform. As an exchange, we choose to do grading requirements wherever we feel it is necessary, and we bear the cost of that. We don't, put that burden of cost on the company anymore. 100% underwriting, that's a very relevant point out here, because let's say if a company wants to, an SME wants to come out with an IPO and they want to raise funds from the stock market. Let's say you're coming out with a 10 crore of an IPO size, and on the last day you received only 8 crore worth of you just received only 8 crore worth of allotment for yourself. What about the last 2 crores, right? That means IPO has failed because it has not gone through, it has not sailed through. But over here, SEBI has mandated the merchant bankers to 100% underwrite this issue. That means on the last day, if you have not fetched 10 crores, the remaining amount, which is the 2 crore, will have to be provided by the merchant banker. So that is what is 100% underwriting out here. So that ensures that SMEs who have done the entire hard work in the last 6 months or a year of coming out with an IPO does not get to win. The IPO should succeed. Having said that, merchant bankers will only open the IPO when they are comfortable with your company, they're comfortable with the markets, they're comfortable with the timing of the IPO, and of course also the balance sheet, right? Then only will they be helping you to open that IPO. Market making, it's a very good concept wherein SEBI has mandated the company to appoint a stockbroker who will act as a market maker for the company. So for the first 3 years of the listing, whoever needs to leave the company or would want to enter into the company by way of buying or selling stock can do so through the help of the market makers, because there are chances that, let's say a company is doing really well, 75% is held by the promoters, 25% is held by the public at large, but nobody wants to sell. But there are other investors who want to enter into the company, but they are not able to enter because of no liquidity on the platform. So over here, SEBI has mandated that you have a market maker who will hold 0.25% of the equity over here. So your actual dilution becomes 25.75% out here. So so that percentage is with the market makers who provides minimum liquidity. It also goes the other way around as well. So if somebody wants to sell but there is no buyer standing in the market, so the market maker will buy their stock from the selling investor. Of course, there is a price band over here which is 10% of the existing price. So whatever the investor chooses to accept can accordingly go ahead and liquidate the stock. So that provides a little bit of window of opportunity for the investor who is stuck or for an investor who wants to come into the company. Post-listing compliances, I would like to just keep it a little short. Post-listing compliances, everybody feels afraid that they have to start doing compliances immediately. But for an SME company, we have relaxed it. You instead of doing quarterly disclosures like how main board companies do, you have to do only half yearly compliances for yourself, which is submitting your balance sheets, audited balance sheets on the half yearly basis. Corporate governance norms, there is no leeway out there. They remain the same, whether it's a main board company or an SME companies. Investors' interest is always kept at the first hand, right? You need to protect their interest first. So corporate governance norms, there are no relaxations out here. You will have to follow the compliance calendar. This compliance calendar is provided by the exchange to the compliance officer of the company, who will on a day-to-day basis run the entire corporate governance norms. And if they have any issues, they can always reach out to the exchanges who have dedicated people to support them. Migration, we have already discussed in the previous slides as well, that this platform provides an opportunity of migration to the main board as well. Sorry, yeah. And for the investors, the investor fraternity, now unlike the main board, you cannot freely buy or sell one single share over here. There is a trading lot, and the trading lot has to be of the value 1 lakh rupee. That means if a company is coming out with an IPO, and let's say the price of per share is around 100 rupees, that then 1000 shares put together becomes one lot. 1000 shares into 100 rupees becomes 1 lakh rupee. That means whosoever wants to buy will have to buy one lot, and that one lot is consist of 1000 shares, right? So they can buy one lot, they can buy two lot, they can buy three lot, depending upon howsoever they want to do it, both at the primary market level, which is at the IPO level, and also in the secondary market. You cannot break this lot, but this lot is subject to change every half yearly by the exchanges. We review these lots of every company. Sometimes this 100 rupee may become 200 as well. That means the lot size will eventually jump to 1000 into 200 rupees. That means 2 lakh rupees. That becomes a bigger chunk, right, to trade. So it becomes difficult to have better liquidity at that point of time. But exchanges have decided to review this on a half yearly basis, and every half year we review those lots and reduce it or increase it depending on howsoever it is. By default, if there is any odd lot that gets created due to some corporate actions or due to any other problem, market makers will buy that odd lot in the entire from the entire lot from the investor. Only if, of course, the investor is willing to go ahead and sell it. Otherwise, they can keep it with them, but they will not be able to trade it freely in the market, right? So this was kept as a condition because they did not want that uninformed investors should participate in this particular platform, because SMEs are a little risky bet because nobody knows about the promoters. It's only their near and dear ones or the people they have been dealing with, who knows about them. So just to keep the sanctity of the platform and also to safeguard the investor interest at large, SEBI came out with the criteria of having 1 lakh as a trading lot out here. Again, we are not barring any investor to come in and invest in the companies, in the SME companies over here. Whosoever is allowed, given by the given by the RBI route, is allowed to invest in the stock market. Whether it's FDIs, FIIs, FPIs, everybody is allowed. QIBs and private equity funds can also support the underwriting along with the merchant banker over here. So these things were already kept in mind before launching this particular platform. Now, just to give you a little bit of shape, I'm almost stretching my time out here, but we had created an index of all the listed companies on the SME platform. We have named the index as Nifty SME Emerge Index. So we started with this index in 2017. We started monitoring it starting December 1st, 2016. The base value is 1000, and currently it has already crossed 10,000. As on October 31st, the November data will come in the first week of December. This is a public information. It is available on our website, which is nscindia.com. Anybody can go and check this particular section over there as well. This is just to give you a brief that how the index has performed. This is just a thematic index. It is not available for trading, but it just shows how the SMEs have been performing so well. So if you see since inception, this index has given an annual return of 39.73%. That's a huge return. I'm not boasting about it over here, but you can see the kind of growth that this particular index has seen. Of course, the index, of the companies that constitute that become a part of this particular index keeps changing because of their eligibility criteria. Exchange has a criteria of this particular index wherein we check how the company has been performing, whether they have been trading in the last couple of days or not, and their average, right? And they become a part of it. So we have mentioned the kind of sectors also these companies belong to. So in this index, almost 23% companies belong to the capital goods segment, 15 from healthcare, and 11 from the information technology, and so on and so forth, as mentioned out here. Right? This is purely from a perspective of the companies who are a part of this index, and does not show the true reality of the companies that have been listed so far, because there may be chances that a lot of companies who have migrated to main board are not a part of this particular index, so their industry will not be. So don't take this industry bifurcation purely on the names that we have 23% companies from the capital goods segment only listed on the stock market. No, that's not the criteria. This is only to show from the index perspective how many companies from that sector is a part of that index, right? From an awareness perspective, we do a lot of sessions like these, and we have done a lot of MOUs with the government bodies, also state governments, with other GIDCs, MIDCs, to support the MSME sector, and on a very regular basis we do these kind of interaction. Before I close in, I just want to show you that with a lot of state governments have really helped us to support the MSME sector. 9 of such state governments today have given financial assistance, or have promised to give financial assistance in their industrial policy as well. Kerala has offered 50% of the IPO expense, subject to a maximum of 1 crore rupee as reimbursements of their IPO issue expenses. Similarly, Tamil Nadu government has given 50% or up to 30 lakhs, whichever is lower out there. Gujarat again 5 lakh rupees, Himachal, Punjab 10 lakh, Uttarakhand is 2.5 lakhs, Haryana 5 lakh. Maharashtra has in their industrial policy mentioned that they will provide financial assistance to the first 250 SMEs that have listed on the SME platform. They did not really specify any amount. We are again trying to work with the government to see if we can have some amount out there. And just for information, as on date, I guess only around 110 odd companies have listed on the NSE Emerge platform from the state of Maharashtra. So I guess there is still scope out there. You have to also consider the BSC numbers. I don't have that handed with me, but that's the case. And Odisha we have recently done, and they have also given a financial assistance of up to 10 lakh rupees of the IPO expenses. So we are trying really our best to get in touch with a lot of other state governments to have these kind of policies around. Apart from this, we have also signed a lot of MOUs with other state governments to provide financial literacy and also help the MSMEs of that particular sector to come ahead and list on the stock market. We have just recently signed an MOU with the state of Uttarakhand, and another one was with the state of West Bengal, and very soon we are coming out with 1 or 2 more MOUs, and you shall hear about it from our social media handles as well, and also of course the press release. So that is it from my side. This is what I wanted to leave you with, that the information that SME platform is here for all of you to take advantage of. You can always reach out to us, go to our website, have a look at that. And if you have any questions, I'm very happy to address them now or at the end of the session. Dojo, over to you.
Thanks a lot, Gagan. It was really a wonderful insight into how NSE operates and what kind of support they gave to the SMEs across India. Actually, yes, any entrepreneur, his ultimate goal is to reach an IPO stage. And after this COVID from 2020 onwards, we are seeing lot many SMEs are going public. And actually, with the support of, as you rightly said, with the state governments helping SMEs and incentivizing them, I think there's no other better time than this, than going on public. So thank you very much, Mr. Gagandi, for sharing this wonderful info. I would like to, request every SMEs to take his help, and I'm sure that he's very approachable, help you throughout your entire journey to reach your IPO stage. So thank you very much, Mr. Gagandi, once again, on behalf of Small Enterprise and entire speakers and the audience here. Thank you.
Thank you so much for having me. Thank you.
Thank you. Great. So our next speaker, I would like to welcome Ms. Jyoti Shirali. She comes with about 20 years of diverse experience in her business into consulting, strategy, marketing, commercial operations. She's been in leadership in senior leadership roles across consumer health, medical nutrition, personal care, foods. She works with About Nutrition, with Zydus Wellness, Dabur, and also been part of the CII, Confederation of Indian Industries. So, with a great experience and expertise, so let's welcome um, Ms. Jyoti Shirali, and she's going to talk about financial value creation for SMEs, short-term and long-term strategies.
Thank you, Dojo. Thank you for inviting me to this event, and a warm hello to all the participants who are present here. So today my discussion is essentially on, the theme is, there are two parts to the theme that I'm going to be talking about. So one is MSME 2.0. So why MSME 2.0 is essentially because, what I feel is that today the MSME sector is on the cusp of a major change. And you can see that from the lot of initiatives that the government has been taking since COVID. Also, I think the pandemic has given a major push to the sector, which is pretty obvious from what my earlier speaker Gagandeep said. So many of the IPO sector is also booming. The other point on MSME is the fact that there's a constant talk about MSME versus startups. So you will find that there's a lot of buzz about the startup revolution in India. But somewhere I felt that the MSME sector also needs to catch up, and there has to be a buzz about this sector because ultimately today you are contributing more than 30% to India's GDP, more than 40% to exports. So why is that buzz factor missing in the case of MSME? And in that context, what I think the role of various value creation strategies becomes important, and particularly the case of financial strategies. Now, when we talk about value creation, I'm sure all of you will somewhere agree that, this is a word which is being used and abused a lot. It is being used very, very loosely very often. What exactly does value creation mean? So, value creation is essentially the kind of steps that any company or the industry as a whole takes to move from the journey from good to great. So when we are talking about from being good to great, obviously what are the parameters on which you judge this? So obviously one is of course the revenues, the profitability, the capacity utilization, so many other things. And we will in that context discuss the role of finance in value creation. So with that, I think I'll start my discussion. So I'm starting the presentation on a slightly somber note. I promise you that I'm going to be ending on a very, very positive one. But broadly, my presentation is essentially we are going to talk about the big picture first. What is the scenario that the MSME sector is performing today? And so we are talking about this VUCA world. So I'm sure all of you, or at least most of you, would have heard this word, which is being used pretty often in the last 2 to 3 years. So what is a VUCA world? It's a volatile world, it's an uncertain world, it's a complex world, and it's an ambiguous world. It's a world of essentially a lot of disruption that you see all over. And if you actually look at it in a granular fashion, there are about 6 global disruptors, which are shaping the future of work. So one is the millennial or the Gen Z customer who is constantly changing his or her attitudes, preferences are today changing. Then you have globalization and the role of e-commerce, which is today changed the way we shop the world over. The world is one. We have skills are therefore required in this globalized, disruptive world. We are all discovering new skills are required for new jobs in the Industry 4.0 scenario. Because quite simply, the age of automation and the age of digital disruption is here. And then pandemic taught us about the hybrid work culture and the gig economy, which changed, everything the way we work. And of course, last but not the least, you have the challenge of green transition and climate change, which is talked about so often. So let us look at the macro picture. So the macro picture, if you look at it, India is obviously in a bright spot in this disruptive world. So one is the China growth is slowing, which is likely to benefit India. The China plus one strategy is being talked about, which is likely to benefit us because there's a lot of construction, there's a lot of manufacturing, which is likely to shift from China to India, apart from other countries. You also see a recessionary trend in US and Europe. So what does it mean for us here at the MSME sector? So for India, yes, we are talking about India becoming the 5 trillion economy by 2026. Startups are the toast of new India. If you look at the various sectors which are performing, you have banking, fintech, health, defense, railways. Across sectors, you find that sectorally India is doing very well. And today what you see is a capex-led growth, which is both public as well as private. The MSME sector is also turning around, and therefore the talk of MSME 2.0. But the question is, at 30% of the GDP, why is the buzz factor missing when it comes to MSMEs? I don't know if everyone feels the same way, but I certainly do, that for the MSME sector to kick off, you really need to see a lot of buzz around the sector and the opportunity and the potential it has. What we find is that although MSME is the backbone of the economy, if you look at it, the numbers tell a very, very different story. And what is that? So we just look at that in the next slide. Look, I think this actually tells us a lot about where the challenge is. So we talk about the 6.5 crore MSMEs today in India, out of which more than 90% are, less than 5 crores. So almost 6 crores. So that's 90%. The medium scale is about 3%, and probably the micro is 90% and the small is about 7%. So essentially, until and unless there is a transition, more companies transit and grow from micro to small and from small to medium, the challenges of the MSME sector will remain. And the great takeoff that we've been talking about, MSME 2.0, cannot happen. So therefore, and this is just my skew, I feel that the skew should be maybe 50% micro, 30% small and 20% medium. Until and unless we get there, the entire sector will always take time to kick off. So let's look at what is the reality check as far as MSME is concerned. So yes, on the positive side, you have they are contributing 30% to the GDP, 40% to the export, but more than 90% of them are small and micro. The question is, how do you get the MSMEs to dream big and build scale? So credit gap, the other reality check, which is very important from today's discussion perspective, is that there is a huge credit gap of about 42 lakh crores, which is $530 billion. Credit which is due to the MSME, but they've not been getting it. And only 14% of the MSMEs have had access to funds. So that's a big challenge. Again, the MSMEs today account for only 14% of the loans from the scheduled cooperative banks. The other big challenge is the high carbon footprint, with about 110 millions of CO2 emissions which are being generated annually by the CMEs. How do we get the CMEs to use various technologies to actually contribute in our mission to bring down carbon emissions? The other last point that I wanted to share was 85% of the MSMEs are uninsured, which is a big risk factor if you look at it. So this is broadly a reality check which actually tells you what the challenges are. So for India to become a 5 trillion economy, how do we build a vibrant sector for MSME? And I think that is what we're going to be talking about. So before we do that, unless we understand where the bottlenecks are, it's very difficult for us to identify ways and means in terms of how to re-energize this sector. And what I have is, now most of you would have heard about this, but these are perceptions which possibly a lot of us would agree. So the MSME sector does have a phenomenal entrepreneurial mindset. But in spite of that, you have these challenges when it comes to creating value. There is a low risk appetite, unlike in the case of startups. If you find the difference between MSME and startups is that in startups, the risk appetite is very high. And they are willing to invest. The kind of investments that have gone into the startup sector, a very minor, small percentage has gone possibly into the MSME sector. There is a hesitancy in terms of adopting new technology, and all this leads to issues of formalization and scale. There is also a talk about a lack of marketing savvy. Many companies are doing phenomenally well, whatever they are doing. But it is very important in today's world, online world, wherein you need to talk about all the good things that you're doing. You need to market your company, you market your products, your brands. And that is one area where sometimes many SMSEs are found lacking. And then there is this lack of online visibility, which is fairly evident in the case of many MSMEs. And the last point is, often, they avoid taking professional help. Many a times promoters feel that whatever we are doing is great, let's continue the way we are doing. Let us grow first, and then we will figure out how to hire better talent, how to adopt new technology. But no, I think it is a chicken and egg story. But the question is, you really have to look at how do you build your organization. And for doing that, you really need to look at partnering with other organizations in the digital space, in the marketing space, etc. So, coming to the moot point for today's discussion, I think we all know that one of the biggest challenges the MSME space is the access to finance. So, what is the reason for that? And I think it is actually a two-way road, right? So one is, why are MSMEs perceived as a high risk? It's because of their inability to provide collateral, inability to have showcase their track record, the lack of documentation on their past and future performance. That's one very important factor. So therefore, that leads to a lack of credit for working capital. And very often you find that MSMEs end up using cash flow to fund their growth requirements, which means that you are actually cutting down on your working capital requirements and you're trying to fund growth. Second, the other important point is not exploring the traditional route to raising capital from fintech solutions, private equity, IPOs. This is another area where the MSMEs are often found lacking. And therefore, consequently, I think having a financial strategy, resource planning, cash flow management, and projections I mean, you very clearly need to have a visibility in terms of where is your organization headed 2 years from now, 3 years from now. That is very, very critical for the banking sector and the fintech sector to take MSMEs seriously and to grant them loans. So keeping your financial books and the balance sheet in order, the regulatory compliance, accurate data-driven decision making, all this I think can help the MSMEs a lot in terms of building their credibility and gaining confidence of the investor community and the banks. So coming to the core point of discussion for today's session, how can SMEs create value and build scale? Now, when we are talking about value creation, what I already said, and I'd like to reiterate this point, it is essentially a starting point for any business, not just small, any business, small and big. Starting point for a business to go from good to great. So what is value creation? Essentially about a set of behaviors, norms, processes that helps an organization to achieve superior results. So when we talk about value, we are talking about results which are quantifiable. It could be in terms of your revenue, it could be in terms of the new revenue, the products and services that you launch, how do you build scale, how do you build profitability. So these are the metrics on which value creation is always measured. And I think one very important point is that, the companies themselves can never decide whether you have created value or not. It is your customers, it is your investors, it's your employees, suppliers, your various stakeholders. They are the ones who actually have the right to decide whether an organization has been able to create value. And that would entirely depend on your financial performance. So coming back to finance. So when we are talking about, if finance has always been talked about as a lifeblood of any business, and therefore if that be the case, undoubtedly financial planning is one of the pillars of the value creation strategy. But is there all to it? Value creation is actually a much more larger concept, and while financial planning is definitely one of the most important pillars, which is what we'll find out. But what is the big picture? So very broadly, I wanted to share this slide where I wanted to explain the concept of a value creation framework. And the way I look at it, there are 5 pillars on which value creation the framework rests. So one is strategic planning, second one is digitalization, third is innovation, fourth is modernization, and then financialization. So obviously, while financialization is one very important pillar of the entire value creation framework or your strategy, the fact is you have to fire from all the cylinders for your value creation to work. So explain very simply, when you're talking about strategic planning, you need to have a very clear vision in terms of what is your goal, where do you see your organization 4 years hence, 5 years hence, what are your products, who is the customer you are targeting, what does it cost you to, suppose you're targeting, let's say from 10 crores, you want to take your organization to 50 crores. What are the resources that are required for you to transit from 5 to 50 crores? What are the products that are required? What is the technology that is required? So all these factors actually tie in together when we are talking about value creation. The second one is digitalization. So unless you go digital, unless you automate and streamline your businesses and processes, value creation will take that much longer. And in today's disruptive world, I think all of us know it's a no-brainer that if you don't go digital, you might as well shut it. And that is the perception. I'm not saying it, that is the perception that you all know. Innovation and modernization, I think we all know that in a globalized world, how willing are you, how open are you to looking at technology transfer, getting new technology, new ideas, etc. All using best practices which other organizations have used, All these are important factors. And finally, we come to the financialization piece, which is that it's very important to have a well-crafted business and financial plan, which to manage your cash flow, reduce your financial risks, your resource planning. So once you have that, it is very easy for the investor community to know that yes, this is one organization. They are very clear about what they want. They know how to get there. They have that balance sheet and their financial statements in place. And that is what ultimately leads to investor confidence. So, I would like to briefly talk about the fintech revolution which is sweeping India today, which has essentially been led by the digitization of the financial ecosystem, which is today driving transformation in the way we do business and lowering costs. And I think for the MSME sector, this is easily what I would call, a Brahmastra. Because this can transform the way you do business, and particularly for the MSMEs. So I would briefly, like to share with you that there are so many opportunities which have opened up in the fintech space, which could be really beneficial for the sector. So one is, I think it essentially started with the government mandate on e-invoicing, which is a big enabler in terms of leading the digitization process of supply chain financing. So today you have a lot of fintech lenders. Digital lending has today become a big business, and you have supply chain vendor financing for onboarding of vendors, which essentially enables lenders, banks, and the corporates to provide credit to the MSMEs at a much lower cost. Then you have cash flow and invoice-based financing. I'm sure all of you have heard about this. Many of you could be using this. But for the benefit of everybody concerned, I'm just saying that these are huge opportunity areas wherein instead of taking loan with and sharing collateral details, etc., what you have is how you generate your cash flow and your invoices. On basis of that, you are going to be given loans by the fintech lending companies. Therefore, avoiding the risk assessment factors and collaterals. You have the government chipping in as well. So you have the government's OCEN. It's called OCEN. It's pronounced OCEN. It's called Open Credit Enabled Network, which has open standards for collaboration and partnerships between lenders and digital platforms. So therefore, the government today is equally aware of the need to provide unsecured short-term loans and at lower interest rates. Then you have the RBI, which is again doing a phenomenal job with its, which has set up this TREDS, as they call it, the trade receivables and discounting system, which actually empowers SMEs in discounting their financing of their trade receivables without really paying, with low interest and keeping your cost of financing very low. I'm sure many of you are aware of a whole lot of fintech super apps that have been launched in India. Now, all these factors, and then of course you have ONDC, which is the Open Network for Digital Commerce, which the government is, which is like the UPI. What UPI did in terms of democratization of the payment platform, I think ONDC is going to do for the e-commerce business, wherein, for today you have to register separately on each and every platform. Once the open network ONDC gets launched, and I think they're test marketing it, you will find that you can easily transit from one platform to the other through just one channel, which is the open network. And this is going to actually explode the e-commerce segment, which is where the growth is going to happen, particularly keeping the export scenario in mind. So coming back to value creation, I'm going to just pick on these two factors, these two pillars, which I talked to you about 5 pillars, but since the whole focus today is on finance, I am trying to focus on just these 2 pillars and what is it that we need to do. How is it that it can help you to create value for your organization? Like I said, this is a very, very famous quote. If you don't go digital, you might as well not be in business. And automation, I think, is the key to going digital. By embracing digital technology, a value creation strategy. So when I talk about short-term and long-term, obviously, from a financial perspective, you need to automate your finances. You need to reduce your risk, because the single biggest challenge that companies, SMEs face is getting credit. And therefore, at the short-term level, you need to automate your finance function, which will help you to optimize cost and boost revenue. So what are the various things that you can do? Finance traditionally has always been a cost center, right? I mean, it's always been seen as a cost center. But frankly, today, I think it plays a very, very important role in performance management and measurement, because it's a finance department can actually help an MSME in developing KPIs which can align with your objectives that you have set. It can help you track your progress. It can actually keep tracking how your cash flow projections are going, what are your future cash flow projections required. All this essentially helps any organization to gain confidence of the investor community. And therefore, having a full-fledged finance department in any small organization is, I think, the first important step. Many a time, promoters think that this is finance hum sambhal le. But having a full-fledged team with if not a CFO, a good full-fledged team with a chartered accountant and team, which to drive the entire finance function, which can actually plan your future, is the first step that you can do. The second one is, like I said, leveraging fintech solutions. These solutions are there today. So the question is, it's not when, but how quickly can you use these solutions to help you in addressing your cash flow related problems. And then from a long-term perspective, of course, you have automating your larger business processes. Because when we talk about automation, until and unless you have a completely seamless technology which links all the functions, integrates the finance and the customer information function, plus all the others, purchase, supply chain, etc., CRM, marketing and sales, until and unless all the functions in your organization are integrated, that is when you will really see the value creation happen. So short term, immediately get your finance function automated, use the technology, use the fintech solutions which are there, and on a long term perspective, please let us invest in technology and go digital, because that is the only way forward. So, a little sneak peek in terms of what is the opportunity for the MSME. Some of it may seem repetitive, but I want to repeat it for the simple reason that I genuinely believe that if we understand the importance of all the opportunities that are there, the way the fintech sector is opening up, the way the e-commerce sector is booming, I think the sky is the limit for the MSME sector. So you have the fintech revolution which is happening. There is one fintech solution provider which is called Cashflow, and they have already done 18,000 crore worth of invoices for SMEs. I think that should tell us what a boon this fintech revolution is. And today the market is at 30 billion. It is projected to touch 1 trillion in terms of assets by 2030. So fintech, we have to go for fintech. Secondly, go global. Leverage e-commerce. Even so, a perception often gets created that e-commerce is only meant for B2C. But no, once ONDC comes, B2B e-commerce will also explode. And you will have AI-backed tech platforms which will streamline the ease of doing business. It will lower your shipping costs, your logistic costs, and help you build cross-border presence.
Ma'am, we have another 2 minutes more.
Yeah, so I'm done. I just have one more slide. Yeah, sorry. And then, of course, you have the profit, digitally enabled SMEs. There's a study which says that your profit will increase by 2x, your operational costs will come down by 30%. And then you have these various guarantees which the government has given essentially to help the SMEs. And I think Gagandeep already shared with you about the booming IPO market. Going public and raising funds is the next best option, slightly longer. So this is my last slide. So I just wanted to sum up and say that rethinking value creation in a promoter-led SME. Essentially, I just want to sum up on these 3 points which are very important. One is join the Industry 4.0 movement, which guides your operations to drive efficiencies. That is point number 1. Because until and unless you can log insights with business analytics, you exactly know how well your business is doing, how it is likely to do in future, and what are the steps that you need to take to optimize costs and increase profitability. Secondly, adopt fintech to bridge the funding gap. Move from asset-based or balance sheet-based lending to cash flow-based lending, and automation, vendor financing, and apart from exploring private capital. And last but not least, don't miss the big. Because whatever you do, whether it is automation in terms of your finance, automation in terms of your processing, until and unless you get the big picture right, unless you know the basics of what business you are in, where is your business headed 2 years hence, what are the changes that you need to do in your product portfolio to kind of catch up with it in the disruptive world, survive, not just survive, but to catch up with the changes that are happening. All the others may give you very, very limited returns. So with that, I've come to the end of my presentation, and that is from me, so I represent Chrysalis Consulting, which is a consulting advisory. Any of you, if you have any questions, I'd love to engage with you. You can check out my website as well, and my number and email ID as well. I'd be happy to, I hope, I'm sorry if I took a little extra time, but at a later date, we'll be happy to engage with you. Thank you so much.
Thank you very much, Ms. Jyoti. It was really wonderful hearing out and the kind of knowledge that you share audience today. As you rightly said, yes, MSMEs, they shy away from such activity, and they are probably looking out to more support from experienced hands like you. So I'm sure that people definitely come and take your help, and definitely will be sharing your details to them. Thank you very much for the wonderful info. We really enjoyed. So since we are running short of time, I would like to invite our next speaker. Mr. Vadim. He is from Control to Go from Moscow, Russia. He is joining us today and is going to talk about geospatial analytics, closing gaps in fintech domain. So let's welcome Mr. Vadim, and over to you, Mr. Vadim.
Yes, greetings, ladies and gentlemen, and thank you for opportunity to make today brief presentation, and just a very short word from, in fact, from a little bit different point of view, because today presentation by myself will be a little bit reversed. I will introduce my company later on in the end. Shortly, I'm from technology vendor, and we're not just very new to Indian market. So my perspective to show you today is some challenges and gaps which can be faced by financial technology, fintech, NBFCs, or small and medium banking companies in agricultural financial services in India. So the first gap and first challenge we do have, in fact, there is quite troubling statistics that in fact, agricultural crediting nowadays, considering that India is targeting as a strategic way for developing of agricultural sector in the country is agricultural safety of the entire nation. That is one side of the picture. On the other hand, this means that Indian agricultural segment is to improve its productivity, improve its efficiency, and as a result it requires funding and crediting of farmers, including small and marginal farmers all over the country. But in the reality, this access is quite a bit limited to farmers, because banks do not have any information about these people, about landowners, especially considering small and marginal land plots. So these farmers would be very happy to get crediting for seeds, advanced seeds, advanced vehicles, would be happy to have credits for coming seasons, but this opportunity is very limited for them, because banks do not know whom they are going to credit. These farmers are out of QIC services, even out of CIBIL scoring. There's no information about them. That is one side of the picture. Another challenge is that microcrediting, crediting itself in agriculture is not an easy task. In fact, paperwork sometimes takes several weeks or even months, and this is during high seasons, high agricultural seasons. So credit itself is not very useful, because you get it right after agricultural season, so it's too late for fueling your own activities in the field. So one gap, banks do not know about farmers. Another gap, farmers would be happy to access such type of services, but even considering that the penetration rate of smartphones availability is very good all over the country, there are a number of services still, farmers lack of easy access to credits. What is the possible solution for that type of gaps, to close them? One of possible things to get into financial technology domain is to add geospatial analytics, geospatial technologies which are using different types of data, like satellite constellation data coming from different types of satellite, like optical images, hyperspectral images. Same time, such type of geospatial analytics which allows to bank or financial institution or NBC or small and medium credit organization to understand who is this farmer, what is the land quality this particular landowner has, is to use different types of sources, including meteorological services, UAV data, or even ground experiments data, which are also available in the country on a reasonable fair basis. And if this particular system unifies everything in a kind of ensembling techniques in one solution, in one report, which will give a good picture, or a bad picture, on particular farmer, this will ease things, and this will ease the process of decision making on credit disbursement for the particular organization. Another possibility is to make the process of loans applications easier for farmers by providing them mobile services, which allows to embed all possible data in one loan application, send this application to financial institution, and then this bank will get a pack of documents in e-format in order to consider, in order to add this farmer or check this farmer through QIC service, and same time get automated scoring of his land property, the quality of land, yields in a historical perspective, and same time yield forecasting for coming season even. So bank will have a full picture what can be disbursed to the particular farmer in terms of credit. Same time, and touching agricultural insurance domain, which is relatively new for the country, still underwriters in insurance company will also get a very good use of such type of geospatial analytics services, because land plots all over the country, all over India, are relatively small. So it is really hard to evaluate them going directly to the land to particular Gram Panchayat, district, village. It's not an easy task. So adding a special analytics to agricultural insurance domain also gives a good opportunity to insurance companies to reduce the costs for underwriting and time for underwriting of particular customers or particular farmers. And same time, inspection routes and field review of these land plots can be eased using, again, geospatial analytics solution. So all in all, geospatial solution can be a very good point for improving knowledge of particular financial organizations, and even enable exactly same concept in automated service like potential marketplace for credit products which can be provided to farmers all over the country, for example, or same service can be provided as marketplace of insurance products as well. So this technology domain can be one of extra dimensions to improve the quality on the one hand and availability of financial technology services in Indian agricultural domain. So the question is, in fact, what can we do together, and why Control2Go is in the picture? In fact, we are not just very new to India. We already have approximately 4 years of business development experience in the country with local office here in India, and which is most important, we are in fact one of solutions which are recognized by Indian government for crop yield monitoring by organizations like Mahalanobis Center by Indian government. And in fact, this is the backbone of our business, working with government institutions. But Control2Go itself, as the company, opens an activity, a pilot activity, and we are in fact welcome everyone who are interested in getting geospatial analytics solutions in one package. We are opening the pilot activities in coming Rabi season, and in other seasons in coming 2024. These activities will allow banking organizations to score farmers' lands and at the same time make a decision on consultancy basis, or even issue live credits to farmers on top of technologies provided by Control2Go and our partners here in India. So that is the essence of Control2Go approach. So, I hope I was not that boring. We do have quite short time left for our session. But anyway, if you're interested in getting more details on our solution, here are our contacts in Moscow as well as for Mumbai office. Mr. Hassan Latifi, our Senior Business Development, will be happy to help you. And thank you very much for today's opportunity to present ourselves. And I'm finished. And we have questions and answer sessions, so feel free to ask any types of questions you like. Thank you.
Thank you very much, Mr. Vadim. I know that it was a quick presentation, and Control2 is entering India, and I'm sure that's going to be a very interesting journey that you're going to have. And there's a great opportunity for you to interact with the Indian agriculture segment and the financial institutions. So welcome to India, and thank you for joining us today. Even though it was a crisp presentation, there's a lot of information we could get. So the entire session is coming to an end. Thank you very much for all the speakers. Many of them have asked to share the info on their emails, so we will be sharing few of the details. But what we plan to do is we run this entire session in a possibly in a different format on our website as well as a magazine to ensure our readers get this entire information what's been presented today. So thank you all once again for this opportunity, joining us today on this webinar. Thank you, Ms. Jyoti Shirali. A wonderful presentation. It was really, really insightful. And Mr. Gagandeep, ensuring that the SMEs will get your support in taking them to an IPO stage. And I'm sure that the national stock exchanges and the various other stock exchanges are going to see a lot of IPOs coming in the years to come. Especially India is booming, and thanks for all the other supporting factors in the country who's nurturing this initiative. Mr. Vadim, thank you for your time, and all the way from Russia, thank you very much for joining us today. It was a great opportunity to hear from you as well, and I'm in touch. We are in touch with your counterpart, Mr. Hassan. I think he is attending this webinar, and he initiated the entire, so a big thanks to Mr. Hassan as well. So thank you all once again, and we'll wait to see you all soon. Thank you.
Thank you.
Thank you. Have a great day.
Thank you, Doju. Thank you.
Thank you.